Hi, this is Charlie giving you Monday's market commentary, and I hope you're very well. We're going to have a look at the S&P to start off with today before we go and have a look at the currencies and some of the other markets. There's a couple of indicators I want to have a look at here on the S&P. So, yeah, we've had this nice move down. I thought we might come down to the lower trend channel line. Maybe we still will, and we will do at some point in the future anyway, even if we don't do it right now. What we'd be looking for to start off with, we need to see a close above these highs here, really, from the flush down day. So we'd need to see a close above that to even suggest that we may want to then break out to new highs again. One thing, and I've always been for a long time bullish on the market and looking for that movement to break up to absolute new all-time highs. Now, when we started breaking down here, I thought, okay, maybe we're going to come down to the lower trend channel, and then it may take a month or two to work its way up. But so far, we may just want to do that now. We don't know yet. But one thing I wanted to draw your attention to was the McClellan Oscillator. Now, the McClellan Oscillator did reach the level with which the line in the sand from where we say the market is oversold. So it reached minus 200 back here when we had that flush down. So let's take ourselves back to the actual index itself. And so on this day here, we were very much oversold, or short-term oversold from the McClellan Oscillator. So if you hadn't spotted that, then it's always worthwhile remembering to have a look at that indicator when you've seen the market falling away for a few days, because it can get oversold quite quickly, and especially in a bull market. So that was quite interesting. The other thing I think for us to be wary of, though, is as price comes higher. And this could set up quite nicely for new all-time highs, but let's have a look. Let's put our comparisons on. And I've brought up the T2108, which is the stocks that are traded, the percentage of stocks that are trading above their 40-day moving averages. And as you can see, this indicator actually peaked out back in January, really, as we can see around here. We peaked back here, and markets actually went higher into February, but the indicator had peaked out. Now, it doesn't mean to say market breadth can't wane whilst indices still go higher, and that's exactly what's happened there. But certainly we keep our eye on this. If price does start to come higher, whether we see this indicator pick up to see the percentage of stocks breaking out above their prior highs, so we can see that the actual underlying breadth of the market is following the price action of the stock market indices. So that's definitely something for us to keep an eye on. And if we even have a look at the Dow now, because the Dow actually is already breaking to new highs here, because its flush down was not so much. But again, you can see here as we've got this sort of divergent type behavior here between the underlying breadth of stocks on the New York Stock Exchange and that of the stock market indices. So I do think it's quite worthwhile bearing that in mind. And we're seeing it across the board here. It's on the Russell 2000 here as well. And let's have a look at the NASDAQ. We're seeing it on the NASDAQ. So across the board, we're seeing the same sort of divergent type behavior. So I do think that at some point, even if the S&P does break to new highs, then we just want to see how that indicator is going to continue. Because at some point, if we break to new highs, but we're still struggling to pick up there with the percentage of stocks trading above their relative 40-day moving averages, then it will suggest that the breadth of the market has weakened, and that then overall we've probably got a divergence in play, and then it will be a case of looking for reversals, because then we'll see a bigger retracement. But and it's certainly there. It's there at the moment, so we should bear that in mind. But certainly in the very, very near term, let's turn this off. Then all eyes are going to be on this S&P, and whether we can close above this high here. If we can, then it looks like this is going to carry on moving back up towards that upper trend channel line, and I'll start to extend that trend channel further. And I'd really like to see those all-time highs, if we put it out to the monthly chart. The all-time highs are over here, just under 1600, about 1580 or something like that. I think they are 1583. So, oops, 5-minute chart there. We'll want to see if they're going to get broken. But if they get broken, what does that mean? That it's all over? No, I don't think so. But we've been in a pretty strong bull market for quite a long time. I've talked about these waves on several occasions now. Look, if we've got this wave here, and then we've got this pullback, then we had this wave, then we've had this pullback, then we've had this wave, this pullback, and then we're in this wave. Can you see that the length of the waves well, looks like at the moment it's gradually shortening. Doesn't look as powerful, certainly. If you see, you can see the size of the bars, and obviously the markets were much more volatile back then. But that's fine, because bull markets tend to rally on low volatility environments most of the time. So it's really going to be interesting to see what happens, but I think there's probably just a few too many bears out there, or has been in the past, and that's why the markets have continued to go higher. Anyway, let's move on to some other markets. So keep your eye on that, keep your eye on those divergences, on those indicators, and keep your eye on the T2106 for other flush downs as and when they do come along. Let's have a look at the euro dollar. I think we can have a quick look at oil. Oil's been rolling over a bit actually on the daily chart, so good news for us at the pumps, but can I say much more than that at the moment? Well, it's just sitting on its 200-day moving average and its 100-day moving average, so we may see a bit of a bounce there over the coming days. Let's have a look at we can have a look at gold as well. Gold has just played within its daily bands here. It had a nice rally up and it's just coming back down. So again, we need to see what's going to happen with gold, whether that's going to break to new lows here, or what that's going to do. Let's go and have a look at the weekly chart. At the moment, it's obviously rolled over. I think we've got these subsequent lows that we keep on testing. Overall, I think we're going to come down to test those lows, and we may have a soft bounce against those, but ultimately I think that's going to break. So that's my view on gold. I think gold's probably going to still come a bit lower yet. Let's have a look at the euro. And so the euro's had again that nice move down. Again, it had a bit of a sell-off on Friday, along with the pound and some of these other markets. We'll have to see what's going to happen here. I don't know if we've got any divergences in place down here, because I haven't checked on my other screens. Because the one thing that I would say is interesting is that we've put quite a big reversal type candle in on the dollar Canada, which tends to work in reverse to that, inverse to that of the euro dollar. So we've put a bit of a reversal candle in here. So if that's going to reverse and pull back down, that would suggest that over the coming days the euro may have a bit of a rally in it. So I'd watch out for that as well. So, and lastly, the pound. Now the pound, again, came into the bands, had a nice little run on it actually, had a nice little run on that earlier on in the middle of the week, but then on Friday it rolled over again. So what's happening with the pound? It's still on the outside of this trend channel, and at some point it will want to come back within that trend channel. So we must keep our eye on that, because at some point it will want to come back within that. I don't know when, but we'll watch for early signs and we'll take it from there. So just like if we go back to the likes of the euro dollar, that trend channel, and when we came outside of it, and at some point it would have to want to come back within that trend channel. And the same with the euro yen, that with its trend channel, when it came on the outside of it, we knew at some point it would want to come back in again. And so it's exactly the same, but in reverse with the pound, that at some point it will want to come back within that, and we'll just be looking for those signs once we start seeing strength come back into that, and no doubt that will come back up into that channel at some stage. Right, that's me for now. I shall leave you to it. Have a great few days. Kim will be back in touch on Wednesday.